Yes, it's official. The O triple B, the one big beautiful bill. Yes, that's the name. It was passed into law, signed by Donald Trump on July 4, 2025. For all of you all that remember his tax reform bill from 2017, well, the big beautiful bill has just cracked into deductions, some of these being temporary, some being permanent. But I've been digesting this bill for the past 2 weeks. It's over 1,000 pages, still trying to see what's going to work and what's not going to work for my real estate investors, my high earned income earners. Implications coming from for homeowners, incentives packed for real estate investors, and also our developers and our home builders out there. This is everything from state and local tax deductions to permanent pass-through perks. And today we're going to break those down and see what that means to your bottom line and how you can get the most out of this bill. For general info, this is not personal advice, so please seek a consultation from your CPA or your tax advisor. So let's start with homeowners. We have, like I said, it's called the SALT, state and local tax deduction. So before, this deduction was only a cap of $10,000 and now has gone up to $40,000. That's huge, especially for those in states like high state tax like California, New Jersey, New York. So think about if you earn $200,000 and at the state level you've already paid $40,000 of income tax, you're actually going to be taxed at $160,000 instead of $200,000. So this is huge, like I said, for those states like California, New York, New Jersey. But keep in mind, it is temporary, right? So this is going to phase out in 2029. For those states, I really, this is something you can take advantage of. But again, it's temporary. So let's talk about the mortgage interest deduction. So that is now permanent, right? And so I know for some, when something's been happening, you're used to it, and so it might not sound like a big tax savings, but it's huge that it's permanent, right? And this is up to 750K debt cap. So, this is something for those who itemize, or are on the cusp of itemizing. This could be a good advantage for you. What's really cool is they brought back the PMI and MIP deduction, which is your premium insurance, mortgage insurance deductibles. And so this had been taken away. I think it had faded out in 2021, but now it's back permanent. So you can deduct your insurance premiums even on those FHA loans. This is for first-time and moderate-income home buyers. This is going to get you some good tax relief. So let's talk about our real estate investors, right? So this bill is packed with incentives that make real estate even more attractive. My favorite, the 100% bonus depreciation, is permanent. So you remember back in 2017 tax bill, the 100% bonus depreciation was a phase out over 5 years. So in 2017, you could take, if you bought equipment or bought a vehicle that qualified in your business, you could take that 100% in 2017. But then in 2018, that went down to 80%. 2019, it went down to 60% and so forth. So that was about to phase out, but now 100% deduction. So what does this mean? So if this year you are in the midst of buying a new property, and things inside, appliances, equipment, for those short-term rentals, the furniture that you need to furnish, to stage it with, is all 100% deductible. Now, keep in mind, you should consult with your tax planner, your tax advisors out there to make sure that it makes sense for you to take it in 2025, but that is available to you. The other deduction, 179 expensing, has doubled. So this was before at a cap of 1.25 million of depreciation, and now this has gone up to 2.5 million. So the thing to keep in mind with Section 179 is, for things you're buying, like I said, equipment, whatever qualified property, you have to keep in mind that Section 179 only allows you that expense up to zero. So you can't carry a loss with Section 179, whereas you can with bonus. It can take you into loss. So if you buy, some equipment for 100,000 and your net income is 50,000, this is taking you into $100,000 loss that you can carry on your tax return to offset ordinary income. So it's huge. The 179, I mean, it's still a good strategy for, I say for landlords and property managers, things like that, but it doesn't let you take your depreciation it doesn't let you take your depreciation into losses, if that makes sense. So what else do we have going on? Like I said, this is jam-packed bill here, but let's talk about the qualified business income deduction. So this is now permanent, which was going away. So like I said, I mean, the difference between a temporary deduction and a permanent is huge. So for all of you that might know this as Section 199A, this is for us, any pass-through income. So this is for my LLCs out there, those partnerships, sole proprietors, even the S corps. You can actually, you'll still get that 20% business deduction going forward. So that is not going away. So I mean, for me, as what happened is, if you remember back in 2017, the corporate income tax rate went from like 35% to 21%, right? That was a huge decrease because, corporate America was out there lobbying and said, hey, we want, this isn't fair. We want our corporate income tax to come down. And so that bill, that passed, and that was 21% permanent. So small business owners are like, hey, what about us? Like, how come we don't get that deduction? So that's how Section 199A came about, where it gave that 20% deduction for those that are generating pass-through income. So what is pass-through income? This is for your sole proprietors. It's your Schedule C. For your S corp, it's when you get that K1. So that pass-through income, right? In an S corp, you've got to pay yourself a reasonable salary, but any dividends or distributions per se that you take are now subjected to this 20% deduction. So again, that's permanent. This is going to lock in lower tax for those of you that have rental income, right? Your rental properties, like that 20% deduction stays. So let's talk about our real estate investors who maybe sold a property this year or are facing long-term capital gains. The opportunity zones have recharged. These are now permanent, so this is a good way for you to offset your capital gains tax is by getting into another property that's of greater or equal value that will allow you to defer that gain. So this is huge for those that already knew that they're expecting huge capital gains, and this is a good time to consult with your tax advisor and start talking about 1031 exchange. Let's talk about developers and home builders, right? This part is for you. The LIHTC expanded, so that's our low-income housing tax credits. This year, 9% housing credits are allocated to states, which increases 12% starting 2026. We've also got the 4% bonded finance projects. So this requirement dropped from 50% to 25%. This is good for affordable housing deals. The financing just got way easier and more likely to pencil out. Same for home builders. You're going to be able to take that bonus depreciation. So those write-offs are for short life property. You've got appliances, your HVAC, all those good things you can write off 100% in year one. Yes, even for new construction. So this is a massive deduction. Section 179 also applies to the home builders. It has that same 2.5 million cap that homeowners can take advantage of. And I just think these are massive upfront deductions. Buying machinery in 2025, deduct it all now. But let's talk about what's going away. So there is the energy efficient home credits that is going to end in 2025. So for you all that are building green, you're going to have to act fast. This is for everyone, with the solar credits, the putting in efficient windows, things like that. You're going to have to act fast because those credits are disappearing in 2025. How do you act on this? Homeowners, you're going to want to revisit if you can itemize this year, knowing that you're going to have that mortgage interest, potentially that your premium mortgage insurance, your premiums on your mortgage insurance. For you real estate investors, you're going to have to look at what you're buying and selling, looking at your capital gains and seeing if it's an opportunity for you to get into opportunity zones. And for my developers, just rerun those LIHTC projections, rethinking those credits. So the one big beautiful bill, like I like to call it, the O triple B. It's not perfect, but it is packed with a lot of incentives to lower your tax bill. So don't let this window pass you by. My faves from this big beautiful bill is definitely the 100% bonus depreciation for my real estate investors. I love that the QBI, qualified business income deduction, is here to stay. For some of the smaller things on there, we've got the no income tax on tips, on overtime. They do come with some nuances, right? There's still payroll tax. You still got to pay for your FICA, Medicare, but I mean that's huge for young college kids. With making tips, like that's saving them money. So the big beautiful bill isn't perfect, but it is packed with tax saving strategies. If this helped, give me a like, subscribe. If you feel like you need more help on these tax strategies, book a call in the description below.